Welcome to today's Midday Market Update for July 9th, 2020. My name is Kevin Hill, as always here with Michael Vincent for our Tuesday and Thursday noon show where we break down the freight markets for you, look what's on the headlines on FreightWaves.com and the freight markets in general.
Absolutely.
And I hear a rumor that it's interactive.
It is. Good afternoon, everybody. Welcome. Thanks for tuning in. Yeah, it is interactive, so get your questions and your comments in. FreightWaves LinkedIn and on Facebook, and we'll see if we can't get them answered.
We will.
Right? We got a great show, though, today, right?
We do. We have two outstanding guests. At the bottom of the hour, we have Jeff Dangelo. He's the founder of Turvo.
Turvo, right.
A freight tech company. And then we also have Matt O'Leary, who's the CEO at Motiv Power, and they do electric chassis.
Electric chassis, yeah.
For
chassis.
mostly Class 5, 6, 7 trucks. So we'll have a great conversation with him. We start off every show, of course, with our headlines from FreightWaves.com with Andrew Cox, our research analyst here at FreightWaves. Then we'll talk about the freight market and also Bank of America upgrading some trucking stocks with Zach Strickland, our director of freight market intelligence. And then it's Thursday, Michael Vincent. So we're going to talk about initial jobless claims once again with our lead economist, Anthony Smith. So we'll see if we're getting a little bit better with those initial jobless claims and continued claims, and see how the economy is doing.
It can't happen fast enough, can it?
It can't happen fast enough. You're exactly right. You're exactly right. But we'll kick it off with a bankruptcy that we have on FreightWaves.com. And Andrew Cox, what do we have on that?
Yeah, Kevin, this is brought to us from Clarissa Hawes. She says an Alabama-based carrier recently filed Chapter 7 bankruptcy despite receiving a loan to stay afloat throughout the COVID-19 pandemic from the U.S. Small Business Administration's Paycheck Protection Program. In its filing, Foster Freights, LLC of Clayton, Alabama, lists its assets up to $50,000 and its liabilities between $100,000 and $500,000. It lists up to 49 creditors. The carrier states that no funds will be available once the administrative expenses are paid. According to Foster Freight's bankruptcy petition, it received a PPP loan for nearly $19,000 on May 4th through SBA lender BBVA USA, which is headquartered there in Birmingham. The carrier, which hauled general and refrigerated freight, has 4 power units and 6 drivers, according to the FMCSA. Foster Freight's insurance is scheduled to be canceled on August 4th, according to that FMCSA's data. Forgivable loans through the PPP started out with $350 billion in the CARES Act, which was signed into law by President Trump in March, and was replenished in April with an additional $320 billion.
So Foster Freights wouldn't be in the data dump that came out this week with the names of people who took $150,000 or more. I think it was, 19,000?
19,000. So they wouldn't be on that list.
They wouldn't be on that list. You can find that list of all the firms in trucking and transportation logistics that took over $150,000 in PPP funds on FreightWaves.com. It's right on the right sidebar under the top stories. You can search that database for anyone that you'd like to, or sort it by state and city. So
you absolutely can. It's kind of a concerning article, because we've been talking about the zombie carriers that have been being held up by the PPP, and here's one. And this is a small one. I mean, the majority of the PPP loans in transportation went to less than $150,000.
Yes, definitely. Yes.
It was right, but those were the majority of the loans. So it's interesting to see. I mean, it's concerning to see. This is obviously a small carrier.
It is,
and it couldn't help them through this. How many more zombies are out there walking? Andrew, you got any insight into that?
Yeah, I have to think that I can make a case for both ways. So, I mean, you can look at the freight volumes right now and the environment that we're in right now. We kind of have a melting up of pricing. We have seen the outbound tender rejection index now in double digits for a couple weeks now, while freight volumes have been extremely elevated. So you can make the case, if they were to have survived that late March, early April, and early May really trough where volumes were at holiday levels, if they could have survived that, you can see that there's greener pastures ahead. But yes, a lot of these are being propped up by that government money that they receive. So I think the next few weeks will be really telling to see how many bankruptcies we can see, because things will get better here into the third quarter and into the fourth, I believe.
I believe it was, I was talking to John Kingston, who's been publishing the PPP stories for us on FreightWaves.com, and we were talking this morning, and I think it was Alex Teresis, the data analyst from Convoy, who had crunched the numbers, and he had come up with only about 8 or 9% of trucking companies actually took loans of any amounts, because they do have other data lists that kind of show under 150,000 mark. And a shout out to the crew. That was a great graphic that you guys have up with the newscast today. So this is great. And we have a settlement in the J.B. Hunt case that if it would have went to court, might have tested the AB5 ruling. Is that right, Andrew?
Yeah, Kevin, this one is brought to us by John Kingston. He says a group of more than 300 independent contractors for J.B. Hunt and the company itself are seeking court approval of a $6.5 million settlement to end an employee classification lawsuit that began back in 2019. In a filing earlier this week, attorneys for the 2 initial plaintiffs and other potential members of the class action suit against Hunt said they had reached an agreement with Hunt's attorneys on the action. The settlement would give each of the 312 class members approximately $20,000 per person to settle what is a familiar ground, whether or not a driver working for the company as an independent contractor should be considered an employee. The case, had it been litigated, would have been a test of the ABC standard, that was brought into the employer-contractor relationships by Dynamex decision of 2018. The ABC test is at the heart of the AB5, the legislation that put the 3-prong test into a statute rather than just a body of civil law. However, while it is in the effect for numerous industries in California, court rulings have said it is not enforceable for trucking because it conflicts with other federal laws.
So if it says it's not enforceable for trucking, why did they settle?
Well, because that's what they say. It's not enforceable for trucking, but no one really knows.
They don't want to go through the expense of testing that theory to...
Yeah, that's I guess the court case now, or that's the legal opinion now, but that can change any time, because I don't think it's really been tested effectively yet, and I don't know if it will. I think that has something to do with it.
Yeah, I would imagine it does. That's why I just, because it says that, it says that they don't think it's enforceable by that, yet they settled. What's the are there ramifications there? I guess we need a legal expert to really come into this.
We probably do need a legal expert.
If they've settled on this, can a new suit then use that to say J.B. Hunt agrees that it is enforceable by truck?
That's a very good question. I don't know either, and I'm not a lawyer.
No,
neither
am I. Neither do I play one on TV.
Yeah, exactly right. But we do have new terms for the YRCW bailout that we saw last week, where the government did a $700 million loan for 30% of YRC. Those terms have come out. John Kingston has that article out on FreightWaves.com right now. What are the details of that, Andrew?
Yeah, Kevin, YRCW is going to work on trying to figure out how it will rebuild itself using that $700 million it's getting from the U.S. Department of Treasury. Its first accomplishment was getting rid of any debt payments for 4 years. In a filing with the SEC on Wednesday, the LTL carrier said that the $700 million it was receiving from the federal government and taking approximately a 30% stake in the company would be cut into 2 loan tranches, one totaling $300 million and the other totaling $400 million. The maturity of both is set for September 30th, 2024, to be settled with a balloon payment. The first loan, dubbed Tranche A loan, will be used to meet YRCW's obligation in several areas, most notably its obligations to the Teamsters Central Pension Fund. Tranche B will be used to buy new tractors and new trailers. The company's plan to use much of the proceeds from the government investment has been reported on the day of the $700 million financial support package when it was announced. The loans came with requirements that the company maintain liquidity of at least $125 million, and that it can hit quarterly EBITDA targets between $100 million and $200 million. YRC Worldwide's first quarter EBITDA was just $34.1 million, so they've got a ways to go to reach that minimum. There is also a requirement that comes from the fact that the money was paid for from the federal government that came out of the CARES Act. The requirement is that YRCW keep its March 24th, 2020 employment level steady to the extent that is practical, and if any reduction is required, that it would be no more than 10% of that number. YRC currently has more than 30,000 employees.
So essentially, does this mean, and I'm not quite sure if I picked it up from the article or not, is that there are no interest payments except for that balloon payment at the end of 2024. So there's no payment, no interest payments at all for 4 years.
That seems to be the case, yes, Kevin.
Okay.
Yeah,
so,
that's what I read.
Yeah. So it's a good quote by the CFO too. We're good as long as we don't blow up. It was in the article. So
it's great as long as we can quadruple our EBITDA.
So
and be able to do that in a tough LTL market right now, where my flexibility on my workforce is only 10%.
Yeah. Exactly right. I mean, it's a tough task. I mean, it's a $700 million loan, though, for a company that was trading at the time with a $70 million market cap.
Yeah.
So it should be a big boost for YRC, and I
should be.
Hope all everyone stays employed and everything keeps humming along for those guys. Yep. We also have another PPP story from Linda Baker, focusing on those venture-backed autonomous trucking companies. What are the details there, Andrew?
Yeah, Kevin, some of the biggest names in autonomous trucking were amongst the businesses that received a loan of more than $150,000 from the federal Paycheck Protection Program. Leading self-driving company Too Simple, with offices both in the U.S. and China, received a loan between $2 and $5 million. The startup, which just last week announced an ambitious initiative to build an autonomous freight network, used the funds to preserve more than 300 U.S. jobs, it said in an email to FreightWaves. The SBA on Monday released a list of more than 660,000 PPP loans of more than $150,000. Although not every company approved on the list accepted it, more than 3,200 trucking companies were on that list, which we have the database for there on FreightWaves.com. The disclosures come as the Democrats have urged greater transparency around the PPP funds. Another autonomous trucking company on the list, Kodiak Robotics, received a loan between $1 and $2 million. The decision to take the bailout from the government has created a divide between the tech startup community. Tapping into the SBA program is a smart business move, many say. Others have questioned whether venture-backed companies, many of which are losing lots of money, should take out loans when small brick and mortar stores such as hair salons and restaurants and have lack of access without the investors to go around. So it's really created a divide there in that community.
Yeah, there's quite a few freight tech companies on there, and that's something that we're going through the data right now. Of course, those NICS codes, I think that's how you say it, or NACS codes. NACS codes are a bit different from transportation and logistics. So, but
you could code people different ways.
So you kind of have to scour through 660,000 records.
You do.
Which is a tough task.
Interesting question there at the end is whether these venture-backed startups that are, many of them losing money, should be tapping into this when others don't have access to these investors. But they all had the same access to the loans, right?
They had the same access to the loans and the same underlying principle of keeping people employed. And as long as they kept people employed, I think there's not too much harm into that.
Yeah, I don't see it as being that.
The goal is the same for both, right?
What's bigger is that Cheng Lu, the president of Too Simple, will be on Mid-Market update in a couple weeks to talk about that autonomous freight networks that they're planning and building out.
Perfect.
It's quite interesting.
That is very interesting, yeah. So a couple weeks from now.
Yeah.
We have a couple minutes left. Andrew, we did Great Quarter Guys on Tuesday. What did we talk about?
Yeah, so we had Seth Holm, the original host, back with us. I think we're going to make that more of a thing moving forward. He adds so much to the conversation. Well, we kind of answered, we decided to take our favorite segment, which is that long short segment at the end of the episode, and just make it into a full-length episode. We dove in deeper. We typically don't leave ourselves enough time to really go deep on those long shorts. So we questioned whether or not Tesla would be the most valuable company in the world in 10 years. We also questioned who would be that secondary player, who is going to be the Android to Tesla's Apple. Then we went on to talk about Uber and the Postmates acquisition, whether they overpaid or not, if Uber's in a better position now with about 1/3 of the food delivery in the U.S. market. And then we ended up getting into where OTVI is going to be in the end of the year and where the S&P 500 may end up if we can reach to all-time highs. So it was a very enlightening conversation to have Seth back. We'll have him back again next week. We'll continue it, keep the ball rolling.
Thank you very much, Andrew. And you can find all of these headlines on FreightWaves.com. You can actually, the full articles on FreightWaves.com instead of the headlines,
absolutely.
Right? And Andrew didn't mention one of my favorite segments of that show, which was our opinions of the Ford Bronco brand that Ford is launching here in the next few days.
So what was your opinion?
I'm a big fan of it.
Oh, yeah, absolutely.
I think it's a good move.
I was going to
I mean, I think it'll be a major competitor to Jeeps.
I was about to get up and walk out if you said anything less. I'm a big fan, too. Very cool.
So we have Zach Strickland, our Director of Freight Market Intelligence, here right now to talk about the freight markets and specifically about a Bank of America report, Merrill Lynch report on trucking stocks and some upgrades in the sector. What do we have on that, Zach?
Yeah, so Bank of America Merrill Lynch came out with a report that basically upgraded several trucking stocks, 5 of them specifically, basically citing a lot of headwind or tailwinds into the next few months of the freight market. Spot rates appear to be entering a more favorable cycle, much more favorable than anticipated, obviously due to the rapid recovery of freight volumes in the United States. And we've got Knight-Swift, Werner, ArcBest, XPO, and TFI International all taking kind of this boost from Merrill Lynch, stating they're probably going to do a little bit better than we anticipated. So they upgraded their valuations by a good bit, although they didn't take XPO and Werner. They did not increase their price expectations like they did the other ones. Some of the highlights are, the facts that the spot rate environment does have a little bit of exposure, but they said, a lot of these companies only have a 10 to 15% risk exposure to the spot market. So if we were to have a second outbreak, they think that they're properly hedged from that risk moving forward. And they also have heavy involvement with things like home improvement and discount retail, which have proven to be much more resilient to any kind of freight market downturns than a lot of the rest of the trucking industry.
Yeah, it seems to make sense with, obviously it makes sense. They're smarter than I am, but the support of these type of companies through their contracted freight, not on the spot market, and the type of companies that they're using, we saw them being supported throughout the pandemic buying and through on, so on and so forth, right?
Yeah, we did. Zach, were they more bullish on the LTL movers or full truckload?
They didn't really, obviously this is more of a truckload environment that they were talking about just due to the nature of the companies that we're talking about, mm-hmm. Werner, JB Hunt, and Knight-Swift. None of those have any LTL exposure. ArcBest and XPO, of course, do. But they didn't really talk about LTL specifically. They were really more talking to the lengths of the freight market itself. The type of exposure to the type of clientele that these companies have is a lot more resilient than some of the other companies. They also were citing a lot of operational changes where they thought that they were much better suited for adapting to the new environment versus some of these other trucking companies.
Very interesting. They did improve their outlook on ArcBest, though, right? Is that right?
Yes, they did.
Which is primarily LTL, correct?
Yes, they're primarily LTL, and they cited the fact that there is a potential risk to the rising costs with they are a union carrier. So they did say that there was a risk there, but they thought that some of the management changes and operational changes that they have implemented are going to put them in the right position.
And speaking of LTL, Alex Botsford, account executive, says YRC has been rebuilding and losing money since 2008. And Amanda Miller says, do you think the government will use it as a leverage against the DOD contract? And my opinion is they probably won't use it as a leverage. So they'll probably, continue the status quo on that part of it.
Although they do admit that they think it's overpriced.
They do, yeah. So they're suing because it's overpriced. But,
who knows? Maybe, man.
That's how the government works sometimes.
We'll see if they settle that suit in the near future.
I know.
For $700 million.
Yeah. Zach, what do we have on volumes and rates today?
So surprisingly, or maybe not so surprisingly these days, tender rejection rates, capacity appears to be leveling off after the holiday. Traditionally, we see, a big spike in tender rejection rates, spot market activity, et cetera, right before the holiday. A lot of people taking holidays or vacations this time of year, which reduces supply significantly. We also have a lot of shipping activity increase leading into the holiday as people are preparing to take those vacations on the shipper side. But even though volumes have contracted a little bit off of what we saw, prior to the holiday, they haven't had a notable impact to rejection rates just yet. It appears that we are entering kind of a flattening, if you will, of spot rates and tender rejection rates, indicating that we may have a little bit of a capacity issue longer than anticipated in July. And July is traditionally, one of it's a cooling off period more than likely, and we were anticipating volumes to drop off from their previous highs, which should relieve a lot of pressure off of the carriers out there.
Zach, I was on with Sonar with Luke Velasca last night, and we were talking a bit about the trough that we're in right now, that 7 days, that week after the 4th, right, and what that trend is, and can you glean any information of where we're going to be, after that 7-day period, by what's happening in that trough? Because right now you're looking at volumes, and volumes continue to drop. A little bit less yesterday than they did the previous days, but still on that downward trend during this kind of soft week that you normally see seasonally, which is not normal over the past couple years.
No,
it usually
not.
flattens this week and then starts to rise, but it has continued to drop a little bit this week. Do we make anything of that or no?
Yeah, I think we can, but we also have to be very cognizant of the fact that those volumes that were increasing prior to the holiday are at record levels. I mean, they're on pace with the March pandemic buying that we saw. And so a little bit of cooling off is expected from such a violent increase. But those levels, I mean, you're talking about volumes that are still showing above like what we would consider kind of a normal market, around that OTVI level of 10,000. They're still up around 11,000, just below it right now. Which is about 10% higher than, actually about 15 to 20% higher than traditional levels at the same troughing time each year. So even though the volumes are falling and they look to be declining off of a very high value, we have to admit that these are still elevated volumes over what we would see this time of year, which again would potentially explain why rejection rates are remaining higher through this period of time a little bit longer than anticipated.
Yeah, the volumes that's a good point. They're a couple, it's the day before yesterday, they were about 22% higher than the normal trough over the last 2 years, and now you're saying it's about 15 or so, because they did drop a little bit more overnight. I guess the telling tale is really going to be how big is that spike, that rebound spike that we normally see, and where does it go from there? I guess that's really going to be telling.
Yeah, that's, obviously we've seen some really volatile markets here over the last period of time. More than likely this will end. We will see some sort of normalization. Will it happen in July? I'm not so sure at this point, but we should see. I think obviously the volumes are going to come down off of that super high 30% over average level, just because of the way that they rose so quickly. I don't think we're going to see that same level of volatility moving forward, but at the same time, 2020 has been full of surprises.
Yeah, yes it has. Too many.
Thanks for the update on the freight market, Zach. And that's our Director of Freight Market Intelligence, Zach Strickland, here at FreightWaves.
Thanks, Zach.
And guess what day it is? This is Thursday, which is initial jobless claims day, right?
Yeah.
So we'll see. It'll be interesting to see July and August in the freight markets and whether the normal seasonal patterns hold or not.
Yeah, we got to bring in the big guns to talk about it today, right?
Yeah, 4 p.m., right?
No, today, Anthony Smith.
Oh, Anthony Smith. Oh, yeah, the freight patterns. But let's talk about
big guns.
Jobless claims with Anthony Smith, our lead economist. What was the number today, Anthony?
That's right, Kevin. Thursday, so jobless claims got the update, and today we saw that 1.3 million, just over 1.3 million individuals filed for jobless claims in the last week for initial claims for unemployment benefits, and so this is down around 99,000 from last week. So this is a substantial decline. Still, of course, there's a long way to go, but this is a step in the right direction. There's been a slow but steady move in the right direction over the last few weeks here. Last couple of weeks, it's been kind of stubborn to come down. So looking at a near 100,000 person increase in the week-to-week movement is indeed a good sign and very relief sign right now, but there are, of course, headwinds. We're starting to see more cases spike throughout the country, and so that is going to cause some concern, as more cases kind of mount up throughout different states, as more restaurants start to close down, more gyms, more stores. That's going to start to kind of limit how many people are going to be in these workplaces that have already returned to the workforce. So we are moving in the right direction, but we're not out of the woods just yet.
Yeah, and I think part of the impact of one of those headwinds really is not only just the restrictions coming back, but then the confidence of the consumers and the people to come back out and do those things the next time they reopen, right?
Exactly right. And then the businesses as well with capital investment.
Yeah.
That's going to be...
we're seeing that in airlines right now, right?
We are, yeah. Let's talk about that, Anthony. United announced 36,000, or the possibility of 36,000, or did they announce 36,000 job cuts?
Correct. So United did announce that they will be putting 36 individuals on notice for potential layoffs. And so this is just one of a few industries that are going to be permanently impacted. If you think about how operations are going to moving forward, there are going to be certain industries that are just going to be impacted on a very high level, and it's going to take years to come back from it, or it just might be permanent altogether. Transportation and travel, for first and foremost, is going to be one of those. As we see fewer and fewer flights, people are going to be conflicted with whether or not to get on flights as more cases spike. Of course, international travel is going to be very difficult as we're seeing restrictions around that. And so as a response, I think when we're looking at the airlines, that's going to be one of the hardest hit industries. We're looking at whether it be flight attendants, or be office workers, whether it be pilots. These are going to be individuals that are going to be impacted in the long term if they're specialized in this particular role. And so this is going to be just one of the few industries, or one of the many industries, I should say, that are going to have long-lasting effects due to the permanent changes from COVID-19.
Yeah, I would think so. I'm sure they weren't real happy to see the EU restrict the United States from flights into their countries.
Yeah, I saw some. I posted. We're about 27% year over year number of airline passengers as compared to 2019. Future ticket reservations, I think, are starting to decline right now. Yeah. So that's probably going to ebb downward as well. Let's talk about continued claims, or continued jobless claims, a little bit. Anthony, what do we have there?
Sure. So when we're looking at jobless claims, there's a few different ways to look at this measure. Again, it's released every Thursday. On the initial jobless claims, this is a week lag. But on the continued claims, this is a 2-week lag. So it does come out this Thursday as well, just got released this morning, but this is from 2 weeks ago. And what we saw was that claims came in just over 18 million. So that's a high number, but this is, again, down nearly 700,000 from last week's reported number. So again, moving in the right direction when we're looking at continued claims. And continued claims are going to be one of the areas I look at closely, because these aren't just one-offs or individuals that are filing for the first time. These are folks that are filing continuously and need continued unemployment benefits on a week-to-week basis. And so when we start to see decline consistently in continued claims, as we have over the last few weeks, I think there's only been 1 week where it jumped back up. But if we start to see continued claims continue to come down, that's telling us that the reopening is really alleviating a lot of unemployed individuals throughout the economy. And so good movement here on the continued claims, but again, these headwinds are still in play, and 18 million is still quite a few. That's a lot of people still, even though we are moving in the right direction. Slow, but yet steady.
So just to clarify real quick, Anthony, while you're talking about these claims, you're talking about these numbers, the 99,000 in the initial, the drop of 99,000 initial claims, and the drop of almost 700,000, 698,000 some odd in the continuing claims. You seem pretty positive about that. Are the trends? Are the downward trends increasing in their slope, or are they flattening, or what are we seeing? Is this a bigger drop? Is what I'm hearing. Is it safe to say that?
Rate of change, right?
The rate of change.
Sure. So when I'm looking at these numbers, I'm not exactly very optimistic about it, because 18 million individuals without a job are still a very high number. And of course, with the ongoing spread of more cases spiking up, there's still a lot of headwinds. So I'm not that optimistic about it, because there are just so many piling headwinds that are kind of in the face of so many Americans right now. The other thing is that's really kind of mounting a lot of concern is potential eviction notices and eviction rates that might be spiking up in the next few months if individuals who have not been able to receive these jobless claims or have not received enough aid in order to pay rent and sustain their day-to-day activities just to meet their bare essentials. And so there are quite a bit of concern still on the horizon, not out of the woods just yet, but when we're seeing that that number was kind of stubborn around that $1.4 million mark on a week-to-week basis for initial claims, seeing that 99,000 drop is a good sign, but still very wary when we're looking at more cases, especially in Florida, Arizona, California, Texas, really start to spike up throughout the country.
Yeah.
Yeah, thank you so much for those economic insights, Anthony, and we will catch up again Tuesday and see what numbers have hit the streets. And also, of course, every Thursday we talk about jobless claims.
We do.
It's definitely. So, again, Anthony Smith, our lead economist here at FreightWaves.
Thank you, Anthony.
Yeah. And now we have Jeff Dangelo, the founder of Turvo, joining us via Skype. How are you doing today, Jeff?
Doing great. Can you guys see me? Thanks for having me.
We can see you.
We see you clearly. How are you, Jeff? Thanks for being on.
I'm doing awesome. Thanks for having me. I feel like I'm underdressed.
Oh, no, don't feel that way. Certainly.
I'll have Kevin stand up. He's wearing shorts.
So Jeff, can you tell our audience a little bit about yourself and Turvo and what you guys do?
Yeah, it's awesome. So I'll give you a little bit of the genesis story. So I spent probably around 13 years in logistics and supply chain before founding Turvo. We founded in 2014. There were three of us that founded the company. I was the sort of SME of the organization when we started. The other two came from the consumer tech world. We had literally, for 8 years before starting the company, looked at a bunch of trends to say, not only when should we start, but why should we start, right? So we're looking at things like how is Amazon influencing the industry, right? What were they doing? We're looking at were companies trusting data in the cloud? And then things like smartphone adoption were certainly important for us. Because for us, to solve problems in the supply chain logistics industry, and when we talk about problems, we think of, siloed systems, right? Manual work that's sort of done across the different companies that are all doing the same thing, and they're just not getting leverage from it. We looked at it and we said, the number one thing, or the number one way to solve this is by giving all of the organizations that have to work together a common tool set, right? So, for example, the reason why Excel works so well, Microsoft Excel, is because when I create an Excel document and I share it with someone, I just assume they have it. And so the only way to really attack supply chain and logistics is to say, how do I have the same software, the same platform, the same data, and share it with my partners, my vendors, my customers, locations, and do it in a way where it makes sense from their perspective. And so we also looked at things like the technology. Were companies like Facebook and LinkedIn, the underlying technology, were they readily available at the time we were going to start? So we launched in 2014. We started with sort of a system of record play, really geared towards the freight brokerage world. So how would we replace, traditional TMS that was built for the company that buys it and sort of create a network ecosystem play? And then we've sort of evolved over time we still continue to do that, but what we also do is we also spend a lot of time in digital transformation. So companies that have many, many systems, how do we aggregate data sort of across those systems? How do we digitize their networks? And then really, how do we allow them to get leverage from the companies they work with to be more efficient, to operate and differentiate the marketplace?
Excellent. Thanks for that. So you're providing a ton of visibility to your clients into their entire supply chain, right, across all modes, internationally and domestically. So during the COVID shutdown and now the economic restart, it really has exposed a lot of weak links, I suppose, in supply chain. I don't suppose it has, right? Can you give us your thoughts on that? Are you getting an insight onto that?
Yeah, I think obviously having siloed systems is troubling, right? 70% of shippers, at least domestically, have zero software, right? Or at least 2/3 of shippers have zero software to manage the shipments. We're using Turvo is very different than sort of traditional methods to connect and share. So EDI is painful, right? These siloed environments cause challenges with things like visibility. I think what we saw with our customers is tremendous growth during the COVID time. So you had companies that traditionally relied on things like VPN, right, to actually create these pipes that were not big enough. So we're obviously causing challenges with the speed at which they can get to data, or actually the ability to get to data, which is a problem. I think you've seen companies that have put a lot of their eggs in one basket or another, right? Whether it's, obviously oil and gas had challenges. You had organizations that worked in the automotive and supply business from the automotive perspective that just got crushed. And so I think as those companies start diversifying not only their vendor relationships, they need to create sort of standardization rather than customization within the supply chain, right? So that it will increase sort of the flexibility and allow them to be able to be more nimble and I would say more future-proof, through something like that COVID has caused.
So, Jeff, you were talking about across the supply chain and visibility and siloed information. I've sold it to a lot of freight brokerages, 3PLs, and part of that siloing I've often found is within the own organization, between different branches, different divisions. The data is often very siloed and not centralized even within the company. Can you explain that a little bit?
Yeah, so I'll give you a couple of examples. So one of the first examples we see let's just talk domestically for a second. If I'm a large trucking company that also has a brokerage arm, we see those organizations have multiple TMS systems, which is really interesting because you have, a TMS that's geared towards the trucking division. You have the TMS that's geared towards the brokerage division. And none of those systems today talk, for the most part. When we talk to the larger organizations, they're having to deal in those multiple systems, which actually creates a silo, like you said, within that organization. So things like, I want to share my capacity from the asset to the brokerage side. You're not able to do that, right? And so for us, at Turvo, it's how do we either sit on top to aggregate that data so that you can share freight and capacity, or share updates or message about that data in a really structured way, or it's how do we replace those systems so you have one unified view without having the extra cost from that legacy system that's available.
Very interesting. Yeah, internal silos, right?
Internal silos.
Something you don't really talk about that much.
You have those 3PLs and freight brokers and carriers as well that have a unified TMS. Yeah. And usually on the freight broker side, it doesn't really work all that well because it's more geared toward the asset. But you keep that legacy system in place because they can kind of communicate in a way with each other.
Yeah, absolutely.
And I think the thing about that is most systems of record were built for one audience or another, right? So they were really geared towards that one audience versus saying, how do we create sort of an agnostic platform that you can look at an order if you're a shipper, you can look at an asset if you're a carrier, you can look at basically a shipment if you're a broker, and really bring all those entities together into one place. And obviously, it's easier said than done, and that's why most organizations and people have focused on the one audience with the one type of system.
So, Jeff, we were talking about the supply chain and the diversification of the supply chain, and one of the things that really intrigued me and why I really wanted you on the show to talk about is the tech aspect, the data aspect of that. And it was something we really didn't talk about that much. It was more the fragmented supply chains and this being delayed and blanked sailings, et cetera. But moving forward, you mentioned future-proof. And everybody's talked about, just in time versus just in case. We've talked to people of the likes of Lawrence Alvarado, professor, he's CEO at WareCap and professor at the Catholic University of America, talking about the smaller warehousing space, flexible warehousing space, and moving those things on. Can you talk to that a little bit? Is that future-proof, the diversification, more sourcing, less sourcing, more nationalism that we're seeing across the globe as to sourcing within just like North America, right? Trying to and how that plays with the tech, et cetera. How do those two overlay each other?
Yeah, it actually plays really nicely with what we're doing, I think. For many, many years, you have the idea of customization. I have to customize my system of record, my operations. I have to customize this. And what does it do? It creates bad data, right? Either data is not structured, data is not sort of able to be handled through integrations. Think how painful an integration is when the data is not clean.
Right.
And so we have to take away customization and say, you need standardization, right? We have to create some standards, not only in the way data flows, but also in the systems or the technology that organizations use. So you do have those sort of common tool sets, right? So for example, if we're getting all the way into inventory and orders, the inventory system of record, the WMS, should be connected all the way through to your TMS, right? You should be able to understand that there's a signal that says there's an order coming down the road 30 days from now. Why don't we have a truck available for that order that's going to happen on that Monday, right? So when you talk about, we want to get away from reactive and become proactive in terms of the supply chain. And you have to build, whatever you're going to build, whatever you're going to buy, has to be, when you talk about future-proof, has to be able to work now when there's a lot of people working in that product, making those updates, but also has to be able to work when trucks drive themselves, right? Or when there's an IoT asset that's connected to a pallet, right, to tell the software or tell the system to do something. So it's not necessarily human saying it, it's actually a system of record telling you or doing the work on behalf of the human. I think, we have a long way to go as a supply chain, or from a technology perspective, not Turvo, but just the industry itself. We have to start breaking down these silos and getting things more connected to be able to create some of that automation.
Hi, yeah, definitely agree with you. It's going to push the supply chain further. To learn more about Turvo, where do our audience go and find Turvo and yourself and connect with you?
Yeah, so www.turvo.com, the first place. Obviously, anyone can email me. I'm one of the founders. I still love being in front of customers. That's where I spend most of my time, at jeff@turvo.com. And then, because Turvo is a network, they might already be using Turvo in one way or the other. They might use it as a system of record, as a way to give visibility, or even to make appointments. So I think there's always ways, as you engage the product, to interact with us, the organization, and to actually get involved to say, how do I become part of that network on a more permanent basis?
Excellent. Thank you very much for your time, Jeff.
Yes, excellent. Thank you so much, Jeff.
Have a great day.
Have a great day.
Yeah.
Awesome. You as well. Thank you.
That's Jeff Dangelo, the founder of Turvo.
Yeah. Very interesting stuff.
It is.
You talk about we think about supply chain, we think about ships moving and trains moving and intermodal boxes and airplanes, so on and so forth. The connectivity and de-siloing of all that data is essential.
It is essential, and it's something that's been happening inch by inch, it seems like, over the last few years. But it's going very slowly, and hopefully, if one good thing comes out of this COVID-19 crisis, is that accelerates that movement.
Yeah, accelerates a lot of good things and a lot of innovations.
Definitely.
Absolutely.
Yeah. And our next guest is on the line right now, joining us via Skype, and that's Matt O'Leary, the CEO of, is it Motiv or Motiv? Motiv. Thank you very much. How are you doing today, Jeff?
Or Matt.
Or Matt, sorry. Last guest.
Good morning, Michael. It's really a pleasure to be here. Thanks for having me.
Yeah, absolutely. Thanks for being on, Matt. Really an interesting thing. And we talk a lot about alternative fuel vehicles and electrified vehicles and so on and so forth. You're taking a little bit different approach to the ones that we normally talk about, which is like Nikola, and you talk about Tesla and Hyliion, et cetera, Lordstown, et cetera. What's your approach there? Can you give us a little, what's Motiv about? What are you guys doing there?
Yeah, so we do take a different approach, Michael. We're mainly focused on the medium truck segment. And if you look at the medium truck segment, it's very fragmented. There's a lot of different verticals. And so most OEMs target high volume applications and purpose-built software platforms to drive that. We have a software platform that drives electric vehicles that can go across all of these verticals. And if you look at the medium truck space, the transition is not going to happen overnight. So you need a platform that's what we call a multi-energy platform that allows you to make the transition seamlessly as you start to bring on more and more electric vehicles. You can still have the same body on top. It doesn't change. It's totally transparent to the driver, and that makes it easier for the operations, because operations like everything to be the same. Don't change anything on me. Keep it simple. Keep it something that we can rely on, and we'll do it day in and day out.
So is this more of an aftermarket play, or are you working directly with the medium-sized trucking manufacturers, or is it a mix of both?
So it's a little bit of both, Kevin. So if you look at, for example, we electrify a lot of Ford chassis, the F-59, F-53 chassis, and then also the E-450 chassis. In those, we actually convert the chassis to electric. Eventually, over time, we like to build that online in Ford's facilities. And we're talking to Ford about doing something like that. And I think it really just depends. The volume's got to be high enough for them to be interested in doing something like that. But we also do things like provide software and power electronics to those who want to electrify on their own. And that's something like we do with Winnebago. So we give them all the parts and the software. We give them support that they might need on some of the integration, and then they can deliver a full vehicle to their customer.
Yeah,
interesting. Thanks for that explanation.
Yeah, I guess the software portion of it makes it a bit easier to scale. Is that accurate to say?
Yeah, I think where we provide value is we have the flexibility to either do just software and power electronics, or if somebody wants us to electrify and integrate a totally electric chassis, we can do that. So the OEMs, although we're mainly tied with Ford, the other OEMs we're talking to, what they like about us is, one, we have a very reliable and mature product, and two, that we have this flexibility to kind of complement the skills and resources that they have to deliver EVs to their customer in very short order. If they try and do it on their own, the horizon's too far out, and there are a lot of fleets that want to get in now, and especially now that the California Air Resources Board has put in the Clean Trucks rule, that's really going to accelerate it. And so the OEMs aren't geared up yet to do that, and that's where we can help fill in the gap.
Yeah, I was going to ask you about that. So you've got, I understand, 100 plus of your drop-in electrified chassis in the marketplace right now. So California's act notwithstanding, and please speak to that, where do you see that number going in the future, say 5 years?
I mean, in 5 years, we'll be, certainly in the thousands of vehicles. There's a lot of things that are happening that are driving this jump in EVs. One is the technology's ready and it's proven reliable. And if you look at the 100 vehicles that we have out there, our uptimes are in the 99% to 100% range. And some of that product is 5 years old. So very stable, the technology's ready, the fleets can depend on it. Two, you have the costs coming down dramatically, driven by a lot of volume, even in the passenger car. And if you look at what we do different than some of our competitors, we use passenger car batteries, BMW batteries. And that means we can ride the cost curve down just as fast as the rest of the industry, faster than somebody who's doing bespoke batteries. And the other thing it allows us is to get the highest performing and lowest cost cells, because those are provided to the high volume providers. And you might think passenger car batteries in a commercial vehicle, aren't you going to overstress it? Well, actually, the power to weight ratio is much more favorable. And so you don't stress the batteries anywhere near as much as you would in a passenger car. Because we use 3 batteries, they only use 1 in the passenger car. When we took the BMW engineers out and drove in our vehicle, they thought something was wrong. Why aren't these batteries coming up to a higher temperature? And that's when the light bulb went on with them that, okay, you're not stressing it as much because you're using multiple batteries.
Matt, let's dive into the new California law a little bit, and can you describe kind of the details of that to our audience and how that's a positive sign for Motiv?
Sure. If you look at the rules that were passed, I'll just take class 4 to 8. That's where we play in. Starting in 2024, manufacturers of products for class 4 through 8, 9% of what they sell has to be electric. That grows to 100% in 2045. I mean, now you might say 21 years doesn't seem that aggressive, but in this space, it's really aggressive because a lot of these fleets keep their product for 10, 15, sometimes even 20 years. So it takes that long to actually get through all the buying cycle. For us, what it means is the fleets who haven't jumped in yet are going to say, we've got this legislation coming. We're going to have to start, if we haven't already, doing electric vehicles. We want to get in now and see how this technology works for us. And we want to influence that technology as opposed to waiting for the last minute and just being a victim of whatever comes their way.
Great. Thank you very much, Matt. How does our audience learn more about Motiv and yourself?
Well, the best way to learn is to go to our website, www.motivps.com. And you can see all of our product there, learn more about our story, and actually contact us that way.
Thank you. Thank you very much for your time.
Thank you, sir.
Yeah.
Okay, thank you.
You bet. That was Matt O'Leary, the CEO of Motiv.
Yeah, absolutely.
Talking about new technologies in powertrain.
It's an interesting play. It's a good space. Still trying to work out electrified for long haul, right? And he's right here in that short, the medium class trucks, in that short haul, that localized network where it moves and works great.
It's an exciting space, and we've had some great leaders in alternative power come through FreightWaves on this show and What the Truck in the last few weeks.
It's absolutely good stuff. And speaking of good stuff,
yeah, let's do some good news.
You want to hear some good news?
I want to hear some good news.
All right, let's
Michael
hear some good news. This is inspirational, kind of. It's good and inspirational. According to the goodnewsnetwork.org, Tennessee native Clayton Ward credits the students he was transporting to their Framingham High School for helping him to rediscover his dream of earning a college degree. Conversations with the students inspired Clayton, who said, "I really enjoy working with the kids, especially the high school students, and during the bus routes, we would chat about their classes. As a history buff, I would share lessons that I learned in school, and we'd talk a lot about academics. After several of these discussions, some of the students would tell me that they wanted me to be their teacher. I think they only said that because I was a different person than their regular teachers, educating them in a different way to pique their interest. But talking to the students on his school bus every day renewed his sense of passion for expanding and teaching young minds. So he enrolled at Mass Bay Community College in May 2019 with the goal of earning his degree and transferred to a 4-year institution and someday teaching history to high school students, just as he did with his kids on the bus. He drove the bus while working full-time, while also taking full course load at Mass Bay, and he earned a spot on the Dean's List every semester, was introduced to the Phi Theta Kappa National Honor Society, and graduated with a perfect 4.0. Last month, he earned the All-Divisional Award for having the highest GPA in the Humanities and Social Sciences divisions and in the Liberal Arts program. Inspirational.
It is inspirational. It tells everybody that it's never too late.
It isn't.
Never, ever too late to go do what you want to do. To chase your dreams, right?
To chase your dreams or to catch exciting new shows on FreightWaves
I know.
TV.
We have quite a few, don't we?
What do we got coming up?
So it's Thursday, so we have freight forecasting at 4 p.m. Who do you have on there?
So freight forecasting today, we're talking, I've got Mr. Supply Chain Daniel Stanton and Kyle Lintner, Principal and Managing Director at K-Ratio. We'll be talking about current freight levels, looking into the future economic conditions, and what is the best tool to use to mitigate your risks moving forward if you're a shipper carrier or an intermediary. It's going to be a heck of a show.
It is. It is. And before we get to what the truck tomorrow, a special announcement that next week, Thursday.
Right, next week, Thursday, 12 p.m.
I think
Eastern.
July 16th, the Midday Market Update. We'll have Anthony Smith and Emily Zink talk about issues that drive people behind the supply chain. It'll be a special episode on diversity.
Yeah, exactly. So they'll be joined by, and I'm going to butcher this name, except
I'm sure
for
you
Pierre. That's why you stopped, is to make
I know.
Pierre Luger, founder and CEO at Fleeting, Laura Ann Howell, COO at Reliance Partners, Hope White, CEO at HD White Logistics, had her on many shows. She's awesome. Brent Arsuga, founder and president of Pinnacle Growth Advisors, will all be on there. It'll be a powerful
too.
episode.
He's been on a couple of shows. He was on Put That Coffee Down about 3 weeks ago.
Yeah, absolutely.
Yeah.
So
Talking about the
great
second
cast
half
of characters.
Yeah, great cast of characters. So that'll be next Thursday show, a week from today, July 16th at 12 p.m. Eastern Time. Tomorrow we have What the Truck, and
we do.
What do we have on What the Truck?
So What the Truck is going to be. It's going to be a great episode, as they always are. They're always epic. When you're on with Dooner, you never know what is going to happen. So it's autonomous now. So Dooner and I will be talking about the state of autonomous trucking, Pilot Flying J's 7th annual Road Warrior contest, Adam Robinson's next freight project. Ricky Eric plays it forward. Another play it forward. And this week's freight news. And so our guests will be Stephen Root, Senior Manager Loyalty at Pilot Flying J, Christian Gebbis, founder at Autobahn AI, Ricky Eric and Michelle DeFranzo, President at IMX Cargo, Adam Robinson, Vice President, Product Marketing Sonar at FreightWaves.
I know.
And good news, bad news about venomous snakes, containers lost at sea, and much, much more.
Great. I'm excited to see Adam Robinson join FreightWaves and be on What the Truck. Then Saturday we have FreightWaves Radio on Sirius XM on the Road Dog Trucking channel. I know I'll be on there, I think, at 3 o'clock to 3:30, but that's a 2-hour show with Dooner, and that's always entertaining with great call-ins for 2 hours where we talk to the trucking markets. And yesterday was Put That Coffee Down. Wish we had Nicole Barrett again to get an update on her entrepreneurship, and also Michael Nemi, who's doing a charity contest on cold calling, and we're ironing out the rules on that and his tips on cold calling as well.
Are you guys just starting that out, this charity contest?
We are, yeah. So we're putting the final details in place, and then we're going to start promoting that and probably run that in August, where people will submit to Dooner and myself their cold calls that they've taped. And
so they're going to tape their cold calls, and then what are you guys going to grade them?
We're going to grade them, and it's a $100 entry fee, but the winner, everything goes to the charity of their choice.
That's excellent.
Yeah, I know. It's a great cause. We get the big guns out, and it doesn't have to be freight cold calls. It can be any industry out there. So
they tape them, send in the files, and you guys are going to grade them.
We're going to grade them. Yeah.
Grade them on air and embarrass them?
Maybe. We're trying to iron out that, but we'll be posting that a lot on LinkedIn. We'll be talking about it on Put That Coffee Down each week.
Yeah, nobody go out there and troll them and send them anything that is...
Yeah, so, I don't know about the taped calls. Dooner just messing me. Don't know about the taped calls, but we're going to figure out that's the detail that we need to really iron out on that. We have Weston Gist, the owner and president of Revere Logistics. The market needs mega carriers for broad network needs. However, these companies are hemorrhaging funds due to poor planning and cost control measures.
I think that's in response to YRC, right?
I think it is YRC response. So I don't think you can really say that across the board. Bank of America upgraded the whole class. So
yeah,
the second quarter started off horrible, but it ended off well. So So it'll be interesting, and we're moving into Q2 earnings. It starts really in earnest.
Yeah, it does.
Next week with JB Hunt, and then we'll be off to the races, and all these public truckload carriers will be reporting earnings, and we'll see exactly, it's very much of a roller coaster. April was horrible. May got a little bit better. June was good.
I think there's some more bumps. I think there's some more bumps in the roller coaster.
Yes, there's a lot
looking
more
at
bumps.
states closing things back down, and consumer sentiment is going to change a little bit. At least their ability to go out and support some of these things are going to be difficult.
Exactly right.
So,
yeah. Well, thanks for joining us today. That wraps it up for the Midday Market Update. Join us Tuesday at 12 p.m. for our next episode.
absolutely.
Peace and
and
love.
love.